Welcome back to Self-Invested, where we talk about how you can do better with money. In this video, I'm going to be talking about the government's official announcement that they'll be launching a scheme to help home buyers buy homes with only a 5% deposit. Now in this video, I'm going to be giving an overview of the scheme. I'm going to be talking about how it will work. I'm going to be looking at whether it will actually improve your affordability as a home buyer. I'm going to give my opinion on whether it's a good thing or not. And then lastly, I'll be talking about when the scheme will be available and how long it will be available for. If you watched my video back in November, you'll know that I made some predictions about how the scheme might work based on some of the things Boris said when he first announced the scheme was going to be launched. I initially thought that it was only going to be open to first-time buyers and that you would have to be under the age of 40 in order to be able to take advantage of the scheme. But thankfully for many people out there, I was wrong. And this scheme is going to be available to all home buyers, not just first-time buyers, but people that already own a home as well. And there's no age restriction on who is eligible for the scheme. This is a scheme that can be used on existing builds, not only new builds, as is the case with the Help to Buy scheme. And the main restriction that there is for the scheme is that the mortgage can only be used on a property that's worth £600,000 or less. So how will the scheme work? If you want to secure one of these mortgages, it's going to work in exactly the same way you would secure a traditional mortgage. You'll either go straight to the lender, who is usually a bank, or you would go to a mortgage broker that will find the best deal for you. All of the mechanisms to make this scheme work is going to work behind the scenes. It's going to be between the government and the lenders. The guarantee that's being provided for these mortgages is not actually to the borrower or the person buying the home. The guarantee is for the lender. The guarantee essentially means that if the home buyer or the borrower was to default on their mortgage, so were unable to pay back their mortgage, and the home needed to be repossessed, and they weren't able to recover all of the money that was loaned to the home buyer, then the government will cover some of the losses that the lender has incurred. So this just gives lenders more confidence in offering higher loan-to-value mortgages. Will the scheme improve your affordability? Well, in a word, no. The maximum mortgage you can usually borrow is 4.5 times your salary. So if you have a salary of £30,000, typically the most that you can borrow is £135,000. And this is unlikely to change with this new scheme. The main advantage of this scheme is that it allows people to secure a mortgage with a lower deposit. Normally, home buyers will need at least 10% of a property's value in order to secure a mortgage. But with this scheme, they'll be able to secure a mortgage with only 5%. Because the scheme doesn't improve people's affordability, the main people that are going to be able to benefit from this scheme are people that already have a big enough salary or high enough salary to secure a mortgage and have just been struggling with saving up a deposit. It's not going to help people who don't have a high enough salary to secure a 95% mortgage for the property that they want. According to the Telegraph, this also means that the scheme is likely to benefit people more up in Northern England and in Scotland, where house prices are lower, and so the salaries that are needed to secure a mortgage to buy those properties is going to be lower. In southern England, especially in the southeast, in and around London, not as many people are going to be able to benefit from this scheme because property prices are quite high. You're going to actually need a slightly higher salary in order to secure a 95% mortgage compared to a 90% mortgage for a property of the same value. Is the scheme a good thing? In my opinion, yes, because it provides a viable alternative to the Help to Buy equity loan scheme, which also allows you to buy homes with only a 5% deposit. But unlike this mortgage guarantee scheme, you can only use the Help to Buy equity loan scheme on new build properties which are sold at a premium, so they're more expensive, and comes with restrictions on your home ownership. So you don't actually fully own your home under the Help to Buy equity loan scheme. You actually only own a percentage of your home. You don't have the same ownership of your home as you will have with a property bought with this mortgage guarantee scheme. However, a negative of this scheme is that with higher loan to value mortgages, the interest rates tend to be higher, which means the mortgages are more expensive. However, the fact that these mortgages are going to come with a guarantee from the government, that may potentially mean that the interest rates that you get with these 95% mortgages are actually lower than they would otherwise be without the guarantee from the government. Also, having a high loan to value mortgage means that the borrower or the person that's buying the house is at greater risk of negative equity. Now, negative equity happens when the money that you've borrowed from the bank is greater than the value of your property. So say, for example, you bought a property for £300,000 with a 95% mortgage. So you took out a mortgage of £285,000 and put down a deposit of £15,000. Say the property's value was to fall by 10%, so it fell to 270,000, and you still owed 285,000, you would be in negative equity because the outstanding mortgage of 285,000 will be greater than the value of the property, which is valued at 270,000. This becomes a problem if you want to remortgage. Say you got to the end of your mortgage term, so you had a 2-year fixed rate mortgage, and you got to the end of that mortgage and you wanted to remortgage to secure a lower interest rate. You wouldn't be able to take out a new mortgage because the property is less than the loan that's currently outstanding on your home. That means that you'll likely be moved to your lender's standard variable rate, which is usually quite high and is going to be more expensive than the rate that you were on. Also, if you were to sell your home, you would have to repay the difference to the lender. So say for instance you had an outstanding mortgage of 285,000, but you sold your property for 270,000, you would have to repay the difference of £15,000. Now, one thing to consider if you're considering this scheme is that house prices are currently high. And if you were to buy now at the top of the market and house prices were to fall in the future, there's a chance that you could end up in negative equity because you've taken out a mortgage at such a high percentage. The best way to guard against this is firstly by trying to make sure that you don't pay over the odds and you really try and drive the best bargain that you can for yourself. Also, another good idea is to lock in a long fixed rate mortgage, which will be possible because as part of this scheme, lenders must offer a 5-year fixed rate mortgage product as part of the range of mortgages that they offer. Now, by having a 5-year fixed rate mortgage, this reduces the risk of entering into negative equity in 2 ways. Firstly, the rate that you will be paying on your mortgage will be fixed for 5 years, whether or not the value of your property increases or decreases. And over those 5 years, you'll be making repayments on your mortgage. So you'll essentially be reducing the outstanding mortgage that the lender has loaned to you. And if you reduce the outstanding mortgage, this means that the outstanding loan compared to the value of the property you're buying is also reducing, which overall reduces the risk of you entering into negative equity. And 5 years is quite a long period and gives you the opportunity to repay quite a significant chunk of that mortgage compared to just having a 2-year fixed rate mortgage. Also, 5 years is quite a long period. There's a chance that house prices may fall next year or at the end of this year. And if you were to buy a property now, there's a chance that you would be buying at the top of the market. But if you were to secure a 5-year fixed rate mortgage, you'll be giving yourself a period of 5 years in which house prices can actually return to the levels that they were previously or to even higher levels. It just basically gives you more of an opportunity to see house prices or the economy recover. So when will the scheme be available? This scheme is going to be available from next month, and Lloyds, NatWest, Santander, Barclays and HSBC will all be offering 95% mortgages from next month, and more will follow, including Virgin Money. Now, the scheme is going to run from April this year until the end of next year, so the 31st of December 2022. If you want to check your affordability and find out more, make sure you contact your mortgage broker to get more information. I would personally prefer to go to a mortgage broker rather than one of these specific lenders, because a mortgage broker will be able to find the best deal for your situation. Anyway, that brings us to the end of this video. Please let me know down in the comments whether you are interested in the scheme. Is it what you were expecting? Were you expecting something else? Yeah, please let me know down in the comments. And also, if you have any questions, please feel free to ask. I'll see you in the next one. Take care. Bye.